Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
When we talk to investors today, some of them are worried about how equity market valuations are quite stretched. And others are worried about what if they miss this rally by staying outside and not participating. But should you worry at all when it comes to investing? We feel that with all weather investing, you don't need to worry. If you think about this year's best performing asset class, was it really equity? There are many different asset classes for you to participate in, for you to feel safe in, and for you to create wealth sustainably. If you'd like to know more about all weather investing, join us this Saturday for our webinar at 10 a.m. In today's video, we're going to do a little bit of a reality check. A lot of investors today seem to be spending their time in trying to figure out where markets will be in a few months from today, or looking for guidance from people who can give them that clarity as to exactly where their portfolios are going to be or where the markets are going to be. So let's do a quick exercise in terms of predicting. How good are we really at predicting things in the market? So quickly take out a pen and paper and write this down. Where do you think the Nifty will close tomorrow or the next trading day? Where do you think the Nifty will close next week at the end of trading? Where do you think the Nifty will close next month? Put down all of these numbers on paper and come back and look at it tomorrow, next week and a month later. See where you stand versus where you predicted. Now let's do a slightly easier exercise. Where do you think the Nifty closed last week? Don't Google the answer, don't do anything. Just based on your experience, why don't you put that number down and you can actually go and verify whether you were right. The whole purpose of this experience and this exercise is to bring to our notice that often even when we have the data, we don't really get these numbers right, and trying to chase the right number in predictions can actually take us down the wrong path. What can we do as investors instead today? While it seems important to have some clarity in which direction markets are heading and where they're going and whether you should jump onto that bandwagon now or wait it out, there is a lot more sense in doing a few other things today. The first is to set a milestone for your portfolio. Decide where you want your portfolio to be in a few years from today. Once you set this milestone, also see how much progress you've made in the last couple of years and try to measure that progress as what is a normal market return versus what extra market returns you've earned. So a decent return to make in the market would be 12 to 15%, and things that you've earned over and above that can either be attributed to a fund manager's alpha or also from general market swings that are more favorable. So once we separate out what is reasonable and expectable versus what is extra that has been given to us, then we need to know what kind of heavy lifting we need to do in the coming years. So then make a plan for what heavy lifting you are going to do and how you are going to contribute to your portfolio, not just from the tide of market returns, but also in terms of what actions you're going to make to enhance your portfolio and make sure that it grows in a stable and sustainable way. We wish you a very safe investing journey. Thank you for watching this video.